Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about the VIX, which trades under the ticker symbol UVXY. And this is a volatility tracking index that is heavily utilized to track the potential volatility in the stock market. It's definitely something that a lot of traders will use as a buy-in short-term trade, as well as there's a significant amount of options that are utilized for the VIX. So one of the things that I want to highlight as we talk about today for UVXY, which is a leveraged fund tracking the VIX, is what it is and why people utilize it. If you find this type of content helpful, please leave a like and subscribe, as it really helps the channel to grow. So the first thing that I would highlight as we look at the VIX today in terms of what is it, why are we looking at this short-term futures ETF as opposed to the actual VIX, is because this is the fund that, generally speaking, I will use when I'm tracking volatility in the market. I'm going to showcase this over a few years. You can see the 1-year trade, but I think the 3-year showcases a better example of it, where you can see that prior to the pandemic, where it shot up this particular index over $800 a share, prior to that, you can see that it would trend in the 120 to 150 range in January, and now over the course of May, it's been pretty much stuck in the $10 range to, we'll take it over 1 month, in the $10 to $20 range, and it has been spiking up into the 30s. So you can see that not only is there a lot of volatility associated with this fund, but there's the capability on these down days especially for this thing to really spike. And the reason for that is because the VIX tracks volatility in the market, and the way that it does that is it goes out and it looks at the option chain. So I'll utilize the VIX options or the UVXY options as my case in point, and you can see here this is the options chain. What I'm doing right now is utilizing TD Ameritrade's platform for today's session, and you can see that what they're doing, or the way that they're tracking this, is it is taking the third Friday of every month, which in this case is going to be the August, and they do this for across all of the S&P 500 stocks. And what they're doing is they're looking at calls on the upside. So for right now, they're going to be looking at this 3150 call, seeing how much is this price changing, this 355, really the spread, but what it's actually going for. And they're looking at the calls to the upside, the puts to the downside. So the $29 put right here, they're looking at the downside and saying, okay, it's going for 315. At market open tomorrow, how much are these changing? How much is this price changing? How much is that price changing? And as that continues to evolve, what they're doing is they're taking that average and they're creating this fund to track all of those movements, which again is super complex, but in practice it's relatively simple. It's saying if the market is going up a lot in a given day, you're going to see this spike. If it is going down a lot in a given day, it is going to spike. Now, that being said, as you can see, even looking at the chart right here over the past year, while there is periods of up days here in the sharp spike, more often you can see gradual downtrend. And the reason for that is because these spikes, and the reason that the stock or the fund tends to go up or down, is based on the rate or the volatility and how soon, or the expectation that the market is going to go down. Because we've had this steady climb upwards, the fund as well has continued to climb down. So that's one of the things that we can look at and why we're tracking that. The reason why I highlight this is because I expect the volatility is going to continue to be incredibly pervasive going forward. The reason for that is if you look at the chart right here and what is included, and I'll include just year to date, you can see that there's been a lot of up and down movements, and right now that we've spiked all the way, or they've gone all the way down into the $20 a share range. So what I would be looking at doing, and something that we'll continue to discuss, is looking at buying into these $25, $30 levels. And if we see a spike, even if it's something like this, where the spike priced or shot all the way up to $38.74 in a given day, you have the capability to swing trade the VIX or play the VIX options. Now you can also see that it spiked all the way up north of $60 a share, but has historically traded significantly higher. This is a great way to buy and hold so that you can play some of the volatility that's expected if the market should have a normalized correction. When I say correction, I mean that it's going to go down over the course of a series of weeks, if not months, as opposed to a sharp drastic drop. Although if there was a drop, that would still be beneficial for the VIX as well, and you'd be able to see that here at the UVXY. Now keep in mind that this does charge a fee if you are going to buy and hold the shares, and you can see that here where it's going to cost 1.65. So for you to be profitable on this investment, you will need to make sure that over the duration that you hold the asset, you will need to cover at least that 1.65%. Now, one of the things that is concerning about a fund like this, which again the UVXY in particular, is that it is a leveraged product, and as such there's a lot of risk associated with it. You can imagine that there's been a lot of people who have been holding the fund for quite some time, and as you can see, it has continued to decline over the course of the past 6 months. That being said, that doesn't mean that we don't have the capability to ride it upwards, and as of right now I do not currently hold a position, but you can see that over time that this is a fund that has gone from very high highs to very low lows. Keep in mind that right now the fund or the trading that it's tied to has continued to decline as the market has grown in terms of the number of companies and the total assets of it, but that the expectation by looking historically and saying, hey, it's going to go back into the $15,000 to $20,000 does not guarantee that. This is as of that given point in time. What is a little bit more reasonable is the idea that this could go to $100 a share. But keep in mind it's a leveraged fund, so if volatility spikes, it will do very well. If you see it spike and then correct pretty soon, which is what's happened a lot, that's how you've gotten this slow downtrend, despite the fact that we've seen some days of increased volatility. But all in all, that is what the VIX is, and in particular what I'm using here, which is the short-term futures ETF Pro Shares, UVXY. This is the one that I in particular look at as opposed to just the actual VIX. So if you have any questions, feel free to drop those in the comment section down below. I hope that this was beneficial in explaining a very popular trading metric and thing to watch, and let me know what you think by hitting the like button and subscribing. Thanks. Talk to you all later.